Good morning, guys. Here I was Secure Metals Exchange bringing you another technical analysis for today, September the 7th, 2012. It's approximately 10:36 a.m. Eastern Standard Time, guys, and what a rally. We saw gold go from 1500 on the 15th of August, currently trading in at $1,735. That's a move of over $145. Great move here on the metals. The stimulus is, I guess, on the horizon, so I think everyone is paying a close attention to that. But more importantly, guys, let's look at the technicals here for a second. If we are looking at gold from the bottom to the top here, we have actually surpassed the 61% Fibonacci level, which is a very significant resistant level. This was taken out. If you saw the video that I did on Tuesday, I mentioned that we did have a bullish flag, a bull flag, and usually after these bull flags, the market will take off. I predicted between 17.15, 17.10, 15, or 20. At least that number on this bull flag. We actually got a move towards 17.12 on that move, actually 17.14 on that move, before coming back down this morning. Came back down to around 16.90. We had some negative US data this morning, and the market just really took off. We've been very fortunate to take advantage of all these moves to the upside, but again, I do want to be extremely careful at this point, guys. And the reason why I say that is because, again, we still have to pay attention to the technicals. You know, gold and silver, they rally, but again, usually the fundamentals will outweigh the technicals. But again, at the end of the day, you don't ever want to ignore the technicals. As I'm looking at this chart here, we are getting very close to this area here. Actually, we are here. We've already moved over the 1720 zone that was very important, because again, this is the 61% Fibonacci level extending from the all-time high back in September. So with that said, if I draw a Fibonacci level here from the highs to the December low of 2011, my Fibonacci level is going to be roughly at around 1769. So it could be that we're currently aiming for 1769. The one thing that I do not like about this chart is when you have a different confluences. So we have a trend line that's gonna hold up, that should hold up here at around 1760. We also have Fibonacci roughly at around 1767 on the weekly chart. And most importantly, we still have a bearish divergence from here to here. So even if this market continues to rally and hit 1769, we actually took a little bit of profit on our short-term positions here at around in the 1720s, actually around 1727 on our short-term positions. The market is going to most likely continue to go up. I'd like to see some confirmation that it's going to stay up. If it is, we might try to take it up to 1750, 1760. But again, this is a very dangerous market here. You have, again, talking about stochastics earlier, your stochastics on the weekly are a whopping 98. And you know, let's look at the previous stochastics. Here we have 86 before we saw a move down from 1700 back down to 1715, and then, you know, it kept going down. We also had a bearish divergence here as well. So if you see this is going down, and you see this is going up, and this seems to be the same situation that we're having here. This is going down, and this is still going up, okay? And this is going up. So again, we could be in a position where, again, you have elections coming up. I don't think anyone wants to go crazy, and I don't think anyone wants to, you know, unless they're aiming for $2,000 to $3,000, which I think is very likely within the next few years. unless you're shooting for those levels, you should be very careful within this range here, because you are at a level where this is a resistant level. We have a lot of confluences. Again, you have the Fibonacci at 61% here, extending from the September high of last year. 61% is going to be 1769, around that price range. Then you have the descending trend line here. So, a confluence, and you have the negative divergence here. So again, really a confluence of resistance up there, and you just want to make sure you're very, very, very careful. As far as the daily chart, if you look at the Fibonacci extending back, let me delete some of these lines here so we can have a little bit of a clearer picture here. So if we're looking at this chart here, this is what I'm going to be looking at. I'm going to look at this from the bottom. I'm going to look at that trend line. I'm going to duplicate this trend line, and I'm going to match it up here. And this matches up quite nicely. So we have, again, resistance roughly right here at around 1768. If we do the Fibonacci a little bit in a little bit clearer picture here, this is going to be your level. And again, I think I pointed out on the last video that every time we've reached this level here, roughly around let's see here, 1750, I think it was actually 1730. Yeah, we've managed to go above it, but we always come back down. So we have to be very careful, I guess, is my point. But stochastics on the daily chart is at 88. If we go back here, the highest one we had was, this one was at 95, which is fairly high. Then what else we had? Yeah, I mean, if we go all the way back, I think the last time we saw 95 was probably up here, back here. We saw 96. But I mean, ultimately, an 88 is pretty high. If you look at the weekly chart, again, 98 is, I mean, we have before back here, what do we have? We had 97 before the dip. We had 94 before the dip. We had 94 before the dip, and right now we're currently trading at 98% on the Fibonacci. I'm sorry, on the stochastics. So again, a lot of room for a little bit, not a lot of room, but still room for more upside. Again, as long as you're being very careful with any leverages, and as long as you're taking care of as long as you're taking care of your positions, you should be, we should, I guess, target at this point 1760. I never like to wait until we hit these lines. I always like to take my profits a little bit earlier. That way I don't have to deal with a scenario like this where this thing hits this, it comes back over here, you're thinking it's going to hit it again, and then it just tanks again. So I'd rather take my profits roughly around this area. If we have a good close above 1730 today, actually if we have a close above 1740, that might be a good indicator that we're going to continue to go higher to maybe around 1768. But again, with a lot of caution. Again, stochastics are still on the strong side. Moving averages are all below us. If we look at silver now, silver chart also looking kind of extended here. If we look at the weekly chart, I believe silver also has a bearish divergence coming up. This Fibonacci we can erase. If we look at Fibonacci extending from the February high to the low of June, we are currently trading in at 33. 61% Fibonacci will currently be at $33 and let's see here, 33.20. So we're just above the 61% Fibonacci from the 27 high. I'm sorry, the February high. So again, there could be a little bit of room for a little bit of consolidation. I again expect all dips to be very well supported, but again, bearish divergence doesn't look too good. If I do an extension from the all-time high, I wouldn't say the all-time high. The all-time high was in 1980, but if I do an extension from the high at 49.82 of April, Then we are approaching the 35% Fibonacci. 50% Fibonacci would be at 37, and around $40 is when you need to be fairly careful, because again, you might see a little bit of a dip before we continue to go higher. But guys, you know, just a beautiful time to be in this sector. Nothing really positive about the economy. The Dow Jones right now is rallying. I have no idea why it's rallying. It doesn't really make a lot of sense. You know, you just have to be very careful. Who wants to be in this market right now with a market rallying for absolutely no reason? You know, there's really nothing going on out there to suggest that this market should continue to rally. Stochastics on the daily chart are looking positive here on the Dow Jones. Again, you should find a little bit of a resistance here at around 13.3. If we're going to continue to go back down, or if we break through this level here, which is key. If we break through this level, then again, we do have some nice upside potential, as long as the break holds and it's not a false breakout. So again, guys, it doesn't really get any better than this. We needed to continue to take advantage of this. The market looks really, really nice right now. And again, good stuff going on. All right, guys, enjoy the rest of your weekend, and happy trading to you. Okay.